Hey, so today is May 28th. I already made a video today going over the killer NVIDIA trade I took, um, my biggest win to date. But this is going to be more of a different video. It's going to be focused more on how I manage risk and what I do pre-market. Um, I did make a previous video how I trade step-to-step guide, what I do daily in the markets. And now I'm going to be making a part two of that video, essentially, what I do pre-market and uh, how I manage risk, essentially. Okay, so let's start off with pre-market first. Go over to charting. So remove this. Okay, so first thing I do is, I start off with ES, NQ, and VIX. I go down from a daily time frame all the way to a 30-minute time frame, and I'm essentially charting out zones, okay? So daily all the way to 30-minute, charting out different price imbalances on a chart, making notes for myself, some cautious zones, some weaker zones, a couple of used zones as well. So that's the first thing I'll always do. I'd always do this the night before. I'll always chart out my zones. It takes me about like 20-25 minutes to do it on 13-14 names. Um, the next thing I do is, I mark out clear areas of support, resistance, some clear trend lines. So if you go to NVIDIA is actually the perfect example. I will, after finishing my zones, I will always go to a 1 hour time frame. Equities pre-market off, ESNQ VIX pre-market on. It's just my preference. But some clear areas of support and resistance. I noticed that 630 was a clear area of resistance. Not sure if it was a key level on Dylan's list, but 630 is clear resistance. So this is clear as day. If I zoom in too, acted as resistance multiple times. So I'm just marking out some clear resistance levels. Let me go to Apple too. I think 128. So today the big NVIDIA move happened, and now I'm waiting for this big, Apple break to happen. So 128 been acting as resistance 1, 2, 3 times. So strong break above it will probably cause a move higher. So just some basic resistance, have a couple of support areas as well. Just some clear levels, and I'll also have some trend lines drawn too. Let me see if I can find some. Okay, good example. Okay, so this trend line broke today, but 1, 2, 3 touches. So this is a clear trend line. I like these trend line breaks because they usually provide good reactions. So that's the next thing I do. I go from daily to 30 minutes, charting out zones, making notes for myself, and then on a 1 hour time frame, I will draw out some basic support resistance levels and trend line. Just to get a gauge of where the market is trading and just to get an idea of everything which is going on. So that's what I do the night before, and then when I wake up, what I'll do is I'll go to ES and NQ. And give you an example today, for instance. So what do you call it? Okay, so I'll give you an example. This morning, I woke up, I had my zones, my trend line, support, resistance drawn out. Now I'm looking at what is ES and NQ doing, I usually sleep around 12 o'clock, so I am missing like 8 or 9 hours of action. So you can see that for the overnight session, I guess today morning, we were pretty much flat, so I just kept that in mind. Same thing with NQ, NQ was pretty flat as well. So just getting a gauge of where ES and NQ are trading, because I did sleep and price did develop in the overnight session. And then after that, I will go to the equities. I will turn on pre-market data, and I just want to see where the equities are trading pre-market. If the equities, for example, if NQ and ES were flat and all of the equities were flat, then nothing is really standing out to me. But for example, today, what do you call it? So ES and NQ are flat, and AMC actually was gapping up. And show you, AMC was gapping up, like 10-20%. So compared to the market in the overnight session, AMC has clear relative strength. So I'm paying attention to AMC to see if there's like possible setup. Obviously, there wasn't a clear setup, so I didn't take it, but that's besides the point. I'm going through these equities, seeing if something is standing out. Um, for example, today, I was, pre-market. We weren't close to 6:30, but um, I was thinking to myself pre-market that okay, if Nvidia gets to 6:30 with momentum, it's definitely going to be a good play. I was telling myself that and a couple of friends that pre-market, and that's exactly what happened. So just seeing if anything stands out in terms of strength or weakness. But honestly, I don't do too much pre-market. Most of the stuff is done the night before, charting out zones, support, resistance, trend lines, etc. So that I would say is my pre-market routine. You could say do a couple of other stuff besides trading, cold showers, meditating, etc. Just to get my mind ready for the day. So it can be a little bit stressful and emotional. Everybody knows that. That's just how trading is. Okay. Next, I want to go over how I manage risk. So let me start off with a losing trade. Yeah, let me start off with the losing trade. Okay, so I took a couple of setups on Tesla on Tuesday. Just highlight the 600 level. Okay, so price level 1, 600. So I'm not going to talk about why I entered, where, my reasoning. I'm just going to show you my entries and exits and how I manage risk. So the way I do stop losses is if my plan fails, I will exit my position. And what do I mean by that? I do have a clear target and I do have a clear stop, but it doesn't always mean that. For example, if my stop is most people would have a conventional stop of say 604, but if I know I'm wrong, then why wait for price to hit my stop? Why give back more money than I need to give back? So say I did take this trade actually. I entered on this DBD 600 break. Um, you know, I always wait for a 5 minute candle close before making my decisions. I don't want to exit impulsively if, price is trading above 600. If I did take a short position, because I took a short position in this case. So, I took the break of 600 slightly before anticipating. Um, and I waited for a 5 minute candle close, and we closed above 600 green candle, nice volume, even though you can't see the volume, and closed above 600. So what is this telling me? This is telling me that sellers don't want to take us below 600 right now. So I'm willing to stop out for a very, very small loss. So as soon as we close and this next candle started pushing up, I exited right here. Why would I wait? Why would I, give back an extra 10-20% on the contracts when I knew my plan failed? Uh, that's just the way I see it, and that's the way I manage stop losses. So that's a good losing trade example. Let me go to a winning trade. Obviously, I want to go to Nvidia. This was a huge winner. So I took this 5 minute RBNR. If you haven't seen my previous video I made, why I took this, why this was a beautiful trade, but essentially I did take this 5 minute RBR. Another thing I want to talk about before, so I did cover how I do stop losses. Before covering how I do take profits, I want to go over a couple of key things. I always believe that you should enter slightly before high day or a key level, etc. Because if you enter after the breakout, then essentially what you're doing is you're paying inflated premium. I can guarantee you retail traders bought here when I sold maybe like 2/3 or 1/3 of my position. So my opinion is to always enter slightly before the breakout. Always enter slightly before the breakout, so um, you can get in before the premium spike. Essentially, as a breakout trader, you want to capitalize on the premium spike. So, after we had this 5 minute candle close, my contracts were spiked up immediately. So, I do have a final target of 2 hour supply. It doesn't mean I'm going to hold all of my contracts all the way till 2 hour supply. And the reasoning for that is because, if I hold my entire position to 2 hour supply, in my opinion, it's just risky. I want to scale out into strength. I want to protect myself on the way up. I don't do the traditional take profit method. I will always scale out into strength, because what if contracts did move 200% and they started reversing, and the reason I didn't take profit was because my final target was at 2 hour supply. That, in my opinion, just doesn't make sense. Even though in this case it did work out, in another trade I'll cover, it doesn't always work out that way. So what I did is, I'll scale out into strength. So I took 2/3 of my position off immediately when we had a nice move. And then after this next move up, I think I scaled out my final contract. In hindsight, that was bad. Why would I scale out when there's no reason to sell? Maybe sell after we have this kind of failed 5-minute RBNR. But that's besides the point. What I'm trying to cover here is I will have a final target, and if my emotions are completely in check that day, then I will scale out in strength towards that final target. So that's how I do take profits. I already covered stops. Let me go to AMC. One final example. So I did take this trade right here. Okay, I think we broke through 45-minute supply, so let me remove this. But essentially, I'm not going to talk about why I entered, but I will say where I entered. So I entered right here, break of this flag, anticipating high day, 45-minute RBNR. A lot of good things going on for this trade. But as soon as I entered, we had this huge spike up. My final target was probably somewhere around 31, 32 when we broke high day, or that's what I was believing we would, and then continue higher, or even a final target of monthly demand. Does that mean I'm going to hold my entire position until monthly demand or monthly supply? No, it's just too risky. And this is a perfect example why. So, we have this nice push up. Contracts are now up maybe like 20% because it is AMC. So what do? I'll always protect myself just in case we reverse. So I took one off for like a nice 20% win on one contract. And this is another thing I want to cover with take profits. Whenever I take my first take profit and it is in the money, what I mean by that is when I take my first take profit and I am making money on that first take profit, I will always move my stop to break even, regardless of what price is doing on the chart. If I scaled out my first one or my first position, or part of my position, and I made money, then the remaining of my position will always go to break even. I don't care what's happening on the chart. That's the best way, in my opinion, to protect yourself. Because what I believe in is taking risk-free trades. So when you're making money, why give everything back and stop out somewhere here? So we moved, and then we had this pretty bearish close. We failed to get above high day. We rejected supply. It was used, so I was anticipating we'd break above it. So as soon as we started reversing, I had exited my other half of my position for break even. So what this ensures is this was still a winning trade. Was it a big winning trade? No. But this could have easily been a big loser if I had stuck to the traditional, stop loss method of stopping out maybe like below 27 or 27.5. So that's just my take on how I manage risk. And I think this was a good example covering why I protect myself on the way up. Okay, so I covered 3 trades, one losing one winning one, and then a good example of how I manage risk. So I think I'm going to end the video here. It is 13 minutes. I did cover 2 things. And, I hope you learned something from this video. And if you have any other suggestions of what videos you want me to make, then just drop a comment and I will do that sometime in the near future. But make sure to take it easy as it is a long weekend now, and take one day off from the charts.